Hi, this is Christopher Terry with iMarkets Live, and I wanted to share with you these monthly S&P charts. I want to take you back to 1987, all the way back up until today, and show you some relationships that are going on right now. And it's basically given me a point to be aware of. It's not for short-term trading. It's something that on a broader picture that should be of interest. Now, when we first look at the charts, we always like to look at price, price relationships, price swings, and where price was. And although some of us look at logarithmic scales, others look at the semi-log, it's not the main purpose of this video. So if we take the swing low that we saw back in 1987, let me just fix this real quick here. We show the data box. And we show that 2000 high. You see that? That's the 87 low to 2000 high. And if we take that move, that complete measurement, and we show it from that market low back in 2009 up until the recent high, you can see the mathematics are pretty much equal. Now, that's not the main purpose of the video, but I know many traders, many people do charts like to look at relationships, and that was interesting to see that low in 87 to the high in 2000 equate to the same amount as it was from 2000 until 2009 to 2014. Another bigger picture chart that I want to take a look at is we're going to take that low and we're going to take the time, all right, the time factor that we saw from 87 to 2000. And we move that over from the next swing low forward. All right? Right here. From right we hit that around that low. So after it came down and started going back up forward, we're coming right into that zone. If you just take a look here, within maybe 2 months, maybe one to 3 months from the equal relationship from that market low to that market high that hit in around 2000, going forward from the next swing low forward as one large time relationship, something to keep an eye on. Now, here's the other thing that I've been looking at, and it's of interest to me. Now, I did the measurements already, so I'm not going to take each one and measure it out for you because we'll take too much time. But what I'm looking at here is the swing up again, and I'm taking the swing from right when the market, after it started going, right as it started exploding to the upside. If we take this swing and we take that relationship, this relationship, and this relationship, these swings up, roughly they're around the same length. All right, if we were to take this and we identify the relationships, these are 5-year swings. You see this? All right, we're talking within a month. So if we take these 5-year relationships where the market went up in 2004, 2009, 1994, 5 to 1999, 94, 99, we had the 2002 to 2007 rally, and we got to 2009 to 2014 rally. And what's interesting is you see here the market corrected for 2 years, and it did the same thing again, 2 years down. So the cycle is 5 years up, 2 years down, 5 years up, 2 years down. We are now at that 5-year cycle up. Okay, and as we had mentioned earlier, one more time, is we take in the bigger picture swing, the much larger picture swing over the longer period of time, and we're now overlaying that. So we have time, price. We also have these huge relationships going on that we had saw. All right, and looking at it once again, right there. You can see that. Just interesting where the market is at this point. It's being stretched out. Very, very bullish market. But also, a couple of things we want to notice. Let me just remove. I love NinjaTrader, but here we go. Just want to remove my drawing tools. All right, just right here. Drawing tools, remove. All right, and a couple of things we want to stay aware of that I always find important. Right here, see this? Top. Top and potential top. Right, let me just get my little arrows. Around market swing highs, around these tops. Tops take more time. They take more to distribute. It's a process before the markets pull back. These are processes before the markets pull back. And I would expect the same thing once again, a process before any kind of retracement. And I would expect a retracement due to the fact it's been up so far so fast. Now, if we're looking at how the markets turned up in the past, the market bottoms always seem to have these spiky moves to them. Whereas these topping process just seems to be completing over many, many bars. And you'll see this time and time again on on a lot of little time frames. And it's just something I want to stay aware of. So I'm looking at the factor of price and time and looking at it multiple different ways. But what was really interesting was the 5-year cycle, the 95 to 2000, 2002 to 2007, and now 2009 to 2014. I thought I'd share that and have yourself an awesome, awesome trading week.